please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
The markets have actually held on to the gains. The Nifty has not seen selling after that first hour marginal green.
Yes, in fact, let's get our technical gurus back on track, back on our show to tell us what to do now. Ashwani Gujral, Mitesh Thakkar and Rajat Bose join in. Gentlemen, it's flat for the moment, so the bulls and the bears having a tough fight. But Ashwani, what's the order for the rest of the day and what stocks would you be looking at?
So it's a weak 20-point rally, and what we've seen is in the first half markets tend to show green, and by the second half I think people tend to give up those positions. So for the moment still get short on rallies. That should be the call both on Nifty and Bank Nifty. ICICI Bank is weak, so that's a sell with a stop of 315, target of 300. Tech Mahindra is a sell with a stop of 520, target of 495. And Escorts is a buy with a stop of 780, target of 805.
Fair point. Okay, so don't be lured by the first hour stability, still continue to be largely a seller. Mitesh Thakkar, what's your overall thrust on the Nifty? You would still wait for 10,420 to short. What would the stocks be?
Yeah, very much, Lata. I think till then we are trading with a stock specific bias, and actually right now I have two buy calls given the fact that some stocks are seeing breakouts on the short-term chart. So Ultratech Cement on the intraday charts is a good play to take with a stop at 4280. Look for targets close to about 4400. And I spoke about Oil India making a fresh high, buy with a stop at 376. Look for targets close to 400 in the next few days.
All right. Rajat Bose, good morning to you. What are you trading now?
Good morning, Lata. One stock is common, that is Escorts, which I have also placed as a buy. Stop loss is 781, target 793 and 798. Yeah, Escorts showing considerable momentum. There is a flag-like formation on the daily chart, so chances are that there would be good upside movement in this. And apart from that, I would like to add M&M Financial. 474.50 would be my stop loss, and 489 and 493 are the two targets. M&M Financial, even on a positional basis, one can buy. It can actually go beyond 500. And I would like to add a third call, because Escorts or Cine has already used it. CESC put a stop loss below 1080, and target would be 1105 to about 1110.
Okay, thanks a lot for that, gentlemen. Manisha Gupta now joins in to give us a quick roundup of all the commodity and the currency market action this morning. Manisha, where's crude heading?
Much higher, as we have seen in the Indian markets as well, and even in the Asian markets, in the global space, we have seen the prices continue to gain up. So if you look at the US crude oil prices, they are now inching towards 62, and 68 has been taken back yet again in case of the Brent prices. A percentage point of gain is how you have seen the MCX prices open here. Well, the latest trigger clearly comes in from the unrest in Iran that has been prolonged now for last 15 days. Also, it is about the US weekly inventory data, which has seen a decline for a 7th straight week. Last year, we saw US inventories decline by 20%, and 2018 pretty much is keeping a track on that. It is the same scenario when you look at the gold and silver prices also. Well, the strength in US dollar is something that's weighing on to this space, though. The FOMC meeting minutes that came in yesterday are slightly on the hawkish side. You have seen a strength in US dollar, and that's weighing on to those prices. So we are off the 5-week highs for silver, off 3-month highs for gold as well, and it's 0.5% to a percentage point of a decline that has come back in case of the precious metal space. The industrial metals have also been under pressure for a second straight day. Yesterday, it started in Europe, continued in New York, and Asia seems to be doing a follow-through sell onto that one. Leaving apart lead prices, which actually still are trading near those 10-year highs, you have seen sharp declines continue in case of those many of those base metal prices. Also, the China import estimates for 2018 have been revised on the lower side. That's yet another reason that you have seen prices decline in Shanghai as well today. Trading strategies, and we have them coming in from Angel and Grow Value today. Angel, of course, is putting out a buy in case of crude. 3,970 is their target on the higher side. Grow Value, in the meanwhile, is dabbling in case of the industrial metals today. They have a sell on aluminum with targets of 137, but they have come out with a buy call in case of zinc prices, buying on dips rather, with targets of 215 per kg for the day.
All right. Thanks a lot for that, Manisha. Crude is having a negative impact. India is the lowest performing, or the poorest performing market today
Yes.
in the Asian screen. Nikkei Japanese index obviously catching up. But the Chinese index, the Thailand index, Malaysian, all of them are trading higher.
This show, well, fresh investments in India have plunged to a 13-year low as stalled projects have risen. In that scenario, what can the infrastructure space expect from the Union Budget 2018? Mahesh Vyas, the MD and CEO, Centre for Monitoring the Indian Economy, joins us now to talk about that. Mr. Vyas, good morning and thanks so much for joining us. Before we ask you about your budget expectations, tell us what the ground report is in terms of new projects, whether they have increased or decreased. Have the stalled projects risen lately?
So the story gets depressing every quarter.
Oh God.
The last quarter, which ended in December 2017, showed us a new low in new investment projects being proposed. So that's really very disturbing in the sense that new investments just don't pick up. But not exactly disturbing, because there is also now a clear built-in expectation that investments will not pick up in the short run. I, in fact, don't expect investments to pick up in 2018 as well. Because capacity utilization, whether in manufacturing or the power sector, is so low, and there's no good reason to believe that that demand will pick up, and so therefore there's no good reason why industry should invest again. So it's not surprising anymore, but it is depressing for sure.
Okay. Well, actually, what I found more depressing is that even the rate of completion of projects is not improving, Mr. Vyas. I can imagine projects getting stalled, but at least some other projects completion, you're not seeing any improvement?
Yes, so in the last 2 years, that was one of the redeeming factors of the capex data, that while new investments were falling, the completion of projects was increasing, and that was really very good. We reached 6 trillion rupees worth of new completions last year, but we are seeing a very sharp fall in that this year. And I think this ties in with the story that new investments are not being proposed, and the ones on hand are not getting completed because of the same reason. The demand is extremely low. So people will not even complete the projects on hand currently.
Okay. So before we come to the
regarding demand.
Okay. So before we come to the budget wish list, you know, is there any sectoral color to this? Where are projects getting stalled most, and where are they most incomplete?
Well, it is essentially in the PPP projects, mostly in the power sector or metal sectors. These sectors which had seen big investments in the preceding 5-6 years are now in trouble because there's excess capacity in power, for example. But there's some offsetting of this in other infrastructure, mostly in transport infrastructure.
Okay.
Okay. And what can you, or what should we expect from the budget this time around to, combat all of these problems?
Well, expectations is a tough word to deal with. I'll say my wish list will be that the government should do two things. One is aggressively pump in money into building new infrastructure. I think we should build more than we believe we require. We require to build excess capacities on roads, on airports. We require an airport not only in Bombay and Panvel, we require one in Thane too. We require a few down the require a lot more infrastructure. We require an aggressive plan to spend a lot on infrastructure, because that will automatically lead to employment and then growth. The second thing is, I think the overall spending of the government needs to be higher. So it's not only about directed expenditure, but I think we require to improve or increase substantially aggregate demand.
Okay.
So I'd be a little benign over wastages as well, so long as the money is spent and the government expenditure offsets the decline in aggregate demand in the country. That's when the private sector will start investing.
Yeah, that's a fair point. We do aggressively need infrastructure, but what would your request be? More in terms of tax holidays and incentives to make the private sector invest, or greater spend by the PWD departments of the various states and the central government?
Well, not necessarily the PWD department. What is important is the government needs to put in money through partnership with private sector, through the PWDs, through whichever other means, but the government needs to just say we need to build these roads, we need to build these airports and seaports and so on and so forth very aggressively. That's what we did to come out of the last infrastructure bottleneck when Atal Bihari Vajpayee was the Prime Minister. We set up this huge ambitious plan of building up the Golden Quadrilateral, the Northeast, West, South corridors. So that aggressive plan changed the face of the country. We suddenly had good roads everywhere in less than a decade's time. So something as aggressive as that on the one hand, and on the second hand, we just require to increase aggregate demand.
So what are you looking at in terms of a total outlay? Because the last budget had a spend of almost 3.5 lakh crores for infrastructure, including railways. If I'm not, correct me if I'm wrong. What is the expectation this time around?
I don't have a number to that. I think I put myself exactly in the position in which the Vajpayee government was. After a few years of liberalization, we saw that the private sector by its own cannot set up infrastructure as was envisaged earlier. And the government took upon itself to empower NHAI and go aggressively on infrastructure. That's the kind of plan we require now. We cannot be fiscally conservative at this point in time.
Like we said, we've been saying for the last 48 hours actually, there has been a quantum leap in the sale of commercial vehicles in the month of December. We found that in the Tata Motors numbers and in the Ashok Leyland numbers. The December sales numbers were 25% higher at least, or 20% higher than the average sales of the last 24 months. Something different is happening here. Is it? Mr. T.T. Srinivasaraghavan, Managing Director, Sundaram Finance, joins us to give us some color on this. Is our analysis right, sir, from the numbers? Are you seeing a quantum leap in fleet operators asking for loans?
One word answer is yes. However, there is always a however. And in this case, some of it is, we'll have to remember that the comparison, of course, you validly make the comparison of the average of the last 24 months, which I think is more balanced. But a lot of commentary tends to look at last December versus this December, forgetting that last December was a complete disaster because of demonetization. So that comparison, I think, is probably not the right one and perhaps a little skewed. Number two, some of, or a good part of the sale that happened in December was also pre-buying, because as you know, on January 1, AC/blower has become mandatory, which has meant an increase in prices of trucks from anywhere between 60,000 to 1,20,000. So there was some fairly frenetic pre-buying that happened in December. Our own numbers, for example, show that we've not had a December like this ever. Right? So there has been a big spurt in buying in December, part of which could tell on the numbers of January and February. So I think some balance is required. However, I think it's true that there is overall a surge. I think we can't deny that.
So you've thrown some cold water on my enthusiasm, and I kind of guarded myself therefore by taking that 24-month average, so I adjust for demon and GST and BS4 and what have you. But Mr. Srinivasaraghavan, you know, like I was asking the Ashok Leyland management, you've seen many cycles of CV growth and trough. Are we on the cusp of something big at all?
Yeah, I'm a little wary of making these grandiose sort of pronouncements for only two reasons. One, in the wake of GST, I mean, GST gets bashed up for a lot of reasons, and maybe they are valid reasons. I'm not an expert on GST. But from the point of view of the trucking industry, I think certainly productivity of trucks has improved significantly. With checkposts more or less gone, turnaround times now, you know, are better by, depending on whom you listen to, anywhere between 10 and 25%. So, which means the truck utilization has improved significantly. Number two, which is something I've talked about many times before on your show, trucks have gotten bigger and bigger, and they're still getting bigger and bigger. So in a very crude way, I could say that today's truck is sort of the equivalent of 2.5 trucks of, let's say, 10 years ago, from the point of view of tonnage. So whether we should be looking at number of trucks sold at all is a question I have. Maybe it's no longer a valid sort of way to look at growth, because even with maybe, let's say, an 8% growth, you could have tonnage growing at 30, 40, 50%, which is really what we should be looking at.
Fair. No, that point is well taken. No, that point is well taken, because, you know, when we reported the growth in the sales as well, we did specifically point out that 35-ton and 40-ton tipper and tractor trailers have been increasing quite a bit, and that's the reason margins have been picking up. I wanted to ask you about the geographical spread, because Ashok Leland told us that there's a huge demand surge that you're seeing in states like Uttar Pradesh, etc. What are you picking up in terms of higher disbursements, AUMs?
No, that's right. I think there is a lot of activity in Uttar Pradesh for sure, though we are not very active in that market. I do know that there is a big surge. Apparently, there's lots of projects that have been announced by the new government. But also, I think the fact that several states are election bound means that they're pumping a lot of money into projects, mostly around roads and infrastructure. So I think there is some genuine pickup in demand in that sector. Plus, if the reports that came out yesterday are to be believed, the manufacturing sector seems to be also perking up, and credit growth seems to be strong. So the portents, if you look at them, seem to be mostly positive. Right? My only worry, which has been the case for many years, is in times like these, it's very easy to create excess capacity. And I think that's the one thing as a lender we would worry about.
Okay. So a final question. As always, we run out of time and we have the most interesting of chats. But therefore, if you can crystal gaze a bit for the year ahead, would you say that we are looking at a truck demand that is at least 10 to 15% higher? As well, how would margins for finance companies pan out? Because this is also looking like going to be a year when the finance cost will rise.
Yeah, I think both are valid questions. I don't know about 10 to 15. I would be personally very surprised if it's anything higher than 7 or 8%. I think high single digits. But, I'm happy to be wrong. But this is just my sense.
Okay.
Margins is definitely something that all of us need to look at, because I think the expert commentary is that rates have bottomed out and we are going to see an upward movement in rates. So that is going to pose its own sort of constraints for all of us. And I guess how innovative we are in terms of how we manage our liabilities is going to be a key factor. Happily for us, both the premier credit rating agencies, ICRA and CRISIL, have recently upgraded our ratings to AAA. So I'm hoping that gives us some extra, muscle room when we go out to raise money.
Okay. Well, we'll have to leave it at that, Mr. Srinivas Raghavan. It was always a pleasure speaking with you, and thank you very much for enlightening us with all the nuances of the dramatic growth in CV sales, both in terms of tonnage and in terms of numbers. We have to wrap up on Bazaar.